The market often prices in the future in the present. Market bears have been shorting real estate stocks for over a year now. So, had the current real estate market situation been priced in a year ago? Well, hopefully, our chief equity strategist and economist John Blank can tell us. John, was the shorting of real estate stocks a foreshadowing of the current state of that sector?
Absolutely, Terry, particularly office REITs. I mean, we got news this morning there's a $300 million office building that's up for sale in San Francisco. It is empty and it's going for $60 million. So that is today. The shorting of REITs that own things like this began a year ago. So they definitely foreshadowed the office problem.
Does this mean that we can expect to see home prices falling more as a result and possibly a revival in real estate?
Not necessarily. We got up to 10 months of inventory back in February and January of this year, but then the financial banking crisis took the 10-year, which the 30-year fixed mortgage rate benchmarks down to 3.5% where it remains. And so now inventory in the United States is at 7, which is below recession. So there's actually been a boost in house buying. And it's likely to continue until the bond market gets the message that the Fed's not going to cut rates this year or even maybe next year or the first half of next year. Until that happens, we're not going to see a slowdown in housing. Canadian housing, by the way, has crashed. And certainly the West Coast is in a slump.
So housing inventories are low. Is that what I heard you say?
Housing inventories are holding up and very low in most parts of the country. That's correct.
So what challenges then are facing real estate this year?
The biggest challenge is in the office space. You get office vacancies at 30%. I mean, cell phone use in Chicago, for example, is 50% of pre-COVID levels, which gives you an indication of how few people are going down there. It's also opening up a door, Terry, for real estate developers, particularly those who can convert these large footprint offices to condos in amenable ways. And there's going to have to be more of that and more working with cities and municipalities to repurpose the urban space around them, the streets and the sidewalks, and kind of make it a package deal to get people back in these areas.
Based on the lower housing inventories that we spoke about a moment ago and all of the other contributing factors, what's your outlook for real estate this year?
I'm actually not too bearish on real estate this year because, a lot of these commercial deals are staggered out of multi-year horizons. It can be very hard from a macroeconomic perspective to see a result because a lot of these are not going to aggregate up in some sufficient way. I think that's the big mistake here. We really did have a financial crisis because of a banking overreach in 2008. This one is more staggered out and is going to play out over multiple years.
What are the bull and bear stories then for investors in real estate stocks?
Well, the bull story is clear. Those who are positioned to repurpose real estate, and actually the home builders, because there's still low inventory in houses. And those are the two bull cases. The bear cases are obvious, like we already talked about. It's in the office space. But again, even there, the shorts may cover. You're trying to short office right now. I'd probably tell you not to because you're going to just walk into a short covering rally. You're very late to that game.
Any impact to this market from the recent banking crisis?
Like I said earlier, the 10-year went from 4-ish to 3.5, and that took 50 basis points out of mortgage rates, which then caused a lot of people to actually enter the market, buying on the hope to get in at a lower, more affordable area. And it's still, with inventories being as low as they are, there's just enough people with a lot of savings. And the only thing that really buys you something, is these homes, and people are still stepping up.
So you wrote recently that given the stoked fears out there, you would bet on finance sector stocks in real estate and regional banking to remain a short-term trader focused for some time. What about long-term?
Well, if you look at, like, for example, a 51 stock ETF for the regional banks, they're at lows that were last seen in 2019. So I do think if you buy an ETF of a lot of regional banks and sit patiently, you probably have a trade that's going to work. I think there is an investment trade to be made in the regional banks. Real estate is just too uncertain for me to make a call for people.
And you also say the trick comes with trying to figure out when their beaten down share prices have bottomed, but how do investors know when that happens?
That is absolutely the correct statement I just made. I have very little visibility and when the shorts finally pull out, you're going to see a lot of covering rallies where the stocks move up, get shorted back down, and then there's multiple months of retesting. Very hard to see when that ends.
According to the latest Zacks industry ranks, infotech, healthcare, and industrials are very attractive sectors. Stocks you're looking at in those sectors are Baidu, Bio-Rad Laboratories, and Ingersoll Rand.
Yeah, let's take up Baidu first. This is the big Chinese Google, ticker BIDU. A for value and A for growth. You can get this stock right now at $117 a share. It was at 160s 5-6 weeks ago. So people are shorting Chinese stocks like there's no tomorrow. The PEG ratio on this is 0.6, Terry. So again, looking for an entry point. If you want to be, buy something cheap that has growth, Baidu is your stock. Bio-Rad Labs, I've got a number 2 rank on this stock. This is out in Hercules, California, and it's a manufacturer and supplier of clinical diagnostics and life science research products. Wide portfolio of products, but what you have to like about this, it's in a space that, again, has been sold off. This is a stock that's very well liked. It's $430 a share, but it was up at $500 a share back in early March. So again, you got a decent entry point. Forward P is a lot higher here. You get a 27 forward PE. And I would also point out to people that it reports on the May the 4th. So you may want to wait till Bio-Rad gets out of the way on its report. But, you got to like a stock that's this well liked by the market.
And Ingersoll Rand.
Ingersoll Rand will be the only Zacks number 1 ranked stock we're going to talk about today. It's in North Carolina. And this is a global industrial. And it produces all kinds of stuff in the industrial space. I've got a $55 share price. And again, it was at 60 not too long ago. So Ingersoll Rand is a really great name to know about. The trend is pretty good off the lows in the 2022. You might get another, we got a target price at 65 here. So you got another $10 a share to chase this one.
And today is April the 27th as we sit here and talk with our chief equity strategist and economist, John Blank, on real estate and housing. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.